Are we on the brink of another market downturn? Fear is palpable across global markets this Tuesday, as investors brace themselves for a potentially volatile week. From Asia's sea of red to the anxious anticipation in Europe, a sense of caution is definitely in the air. But what's driving this trepidation, and what key events are looming on the horizon? The primary focus? Two major events: the earnings report from AI chip giant Nvidia, and the crucial US jobs report due later this week. Nvidia in particular is under intense scrutiny. The company has been the poster child for the AI boom, and investors are betting heavily on it. Market sentiment is undeniably fragile. The expectation is incredibly high for Nvidia to deliver truly spectacular results, justifying the massive investments pouring into AI-related ventures. With its AI chips, the semiconductor giant has become a key indicator for the whole AI trend. The success of Nvidia is seen as a reflection of the health and potential of the entire AI ecosystem. But here's where it gets controversial. Are we in an AI bubble reminiscent of the dot-com era? Some analysts fear precisely that. The rapid growth and inflated valuations of many AI companies are raising concerns about a potential crash. The comparisons to the late 1990s dot-com bubble are becoming increasingly frequent and difficult to ignore. And this is the part most people miss. Adding to the unease, recent regulatory filings revealed that tech billionaire Peter Thiel's hedge fund completely divested its stake in Nvidia. Just last week, SoftBank Group also announced it had sold its significant Nvidia shareholding. These high-profile exits have amplified fears of an AI bubble and sent ripples of concern through the market. Are these savvy investors seeing something the rest of us are missing? Or are they simply taking profits at the peak? Meanwhile, across the globe in Japan, Prime Minister Sonai Tokaichi is scheduled to meet with Bank of Japan Governor Kazuo Ueda. The yen's continued slide to multi-month lows has traders on high alert for potential intervention by Japanese authorities. The yen is nearing levels that previously triggered currency intervention, putting pressure on policymakers to act. Japanese Finance Minister Satsuki Kotoyama expressed alarm over the one-sided, rapid moves in the foreign exchange market. But their attempts to talk up the yen appear to be falling flat, especially considering Tokaichi's support for aggressive fiscal and monetary stimulus. Japan is even considering a massive stimulus package, further fueling concerns about its expansionary fiscal policy. This has led to a sell-off in super-long Japanese government bonds, with yields reaching levels not seen in decades. The market seems to be betting against the Bank of Japan's ability to control inflation and stabilize the currency. Could Japan's monetary policy decisions further destabilize global markets? This is a question many investors are asking themselves. Boldly highlighting any point in the article that could spark differing opinions. Adding to the global economic picture, keep an eye on these key developments today. Speeches from Fed officials Barr, Barkin, and Logan. US factory orders data. So, what are your thoughts? Is the market overreacting, or are these legitimate signs of trouble ahead? Will Nvidia deliver the results everyone's hoping for, or will it disappoint and trigger a wider sell-off? And what about Japan? Will they intervene to support the yen, or will they continue down the path of aggressive stimulus? Share your predictions and opinions in the comments below. Let's discuss what the future holds for these uncertain markets.